All right, thank you for coming today. I'm Corey Rattan, President and CEO of Alvopetro Energy. We're traded on the Toronto Stock Exchange as well as the OTCQX in the United States. I'll let you read the cautionary statements at your leisure. So about 21 months ago, Alvopetro became the very first independent onshore producer in Brazil to deliver sales-specified natural gas into the local distribution network in Brazil. So I think a pretty significant accomplishment for a company our size. One of the other really unique things is that we control at 100% working interest the strategic midstream portion of our business, which is again quite unique for a company our size. So our current production all comes from our core project Cabaret that we've been quite focused on, but we're now excited to also be kicking off an organically funded capital program. We just are almost finished drilling the first of 2 of our exploration wells and expect to have results from that quickly, but we've got a lot of catalysts coming this year as we start to reinvest in our growth. Our operating results certainly have been well ahead of pre-commercialization expectations. We posted our strongest quarter yet in the first quarter, and that was coincident at the exact same time as we had a 50% increase in our natural gas prices. So our realized natural gas price is now over US $11 per MCF, and that translates into some incredibly strong profitability that I'll show you in a couple slides. It also underpins our more balanced and disciplined in our mind stakeholder return and reinvestment model. So what we're looking to do is take about half of our cash flows and reinvest that in organic growth, and take the other half and return that to stakeholders. So in the first 18 months of our project coming on stream, we dedicated almost that entirely to repaying our project financing loan. We repaid over close to 70% of that to date. We've got a strong balance sheet, strong free cash flow generation capacity, and what it allowed us to do is start our dividend program to shareholders about 6 months ahead of plan. So we started that in the third quarter of last year. We just increased those dividends to 8 cents US per share, so that was a 33% increase, and we did that starting in the first quarter of this year. We've got a strong commitment to ESG. This is kind of a long-standing commitment, certainly goes well beyond what the local requirements require of us. We're delivering more affordable and clean energy into the local market in Brazil. And if you compare it to burning fuel oil, we're generating about a 53% reduction in greenhouse gas emissions. Management team, we've got a local team in Brazil that's been operating in the state of Bahia for over 15 years. And at our 2 prior companies, Pacalta Resources in Ecuador in the late 90s, and then with Petrominerales in Colombia in the 2000s, we became one of the larger exploration companies there. We were able to grow both those companies from 0 to over 40,000 barrels a day of production, and managed exits on behalf of stakeholders on a combined basis of about $2.8 billion. So, one of the things that we've always done is we've looked for the best combinations of geological prospectivity and fiscal regime. We certainly think we have that in Brazil. We're operating in a proven hydrocarbon basin with an excellent fiscal regime. You can see we're operating in the northeast part of the country, so in the state of Bahia, just north of the city of Salvador. I think one of the things that's well appreciated is that Brazil's South America's largest oil producer and exporter. But I think what's really underappreciated is that Brazil's still importing close to half of its natural gas. So that really creates strong fundamentals for our onshore natural gas business model. Like I said, we've got a great fiscal regime here, 11% royalty rate. It's actually being reduced down to 8.5% due to some recent government incentives. And we've got our project qualifies for the reduced 15% income tax rate. So this translates into very strong profitability per unit of production. We're operating in a country where the government's strongly focused on improving foreign direct investment and particularly trying to increase investment in the E&P sector. So we think we're in a great spot, and it's at a transformational time in Brazil. So the state oil company Petrobras is in the process of selling virtually all of its onshore production and major business lines. So we think as the market continues to open up and we have this strategic infrastructure position, we really stand to benefit quite nicely. So Like I said, we've been delivering well ahead of pre-commercialization expectations. You can see the production chart on the top left. The first quarter of commercial operations was the third quarter of 2020, and that was roughly the expectation that we'd set for the project going into it. You can see we steadily grew production. We've set a new production plateau level at a much higher level, and you can see in the first quarter we produced over 2,500 barrels of oil equivalent per day. So that was our strongest quarter yet, up 15% year over year and up 3% quarter over quarter. On the bottom left, you can see our profitability per unit of production. So you can see in the fourth quarter of last year, we had a natural gas price of just over $7 US per MCF. And what that translated into is operating netback per BOE or per unit of production in excess of $36. And that represents 82% operating margin relative to the revenue line. So when you combine that with a 15% income tax rate, this is really industry-leading profitability per unit of production, which positions us quite nicely. That allowed us to generate funds flow from operations of $6.6 million in the fourth quarter alone. And then when you layer on the fact that our gas price just increased by 50% up to over $11 at record high production levels, we're going to have a pretty strong first quarter when we announce that in mid-May. As I mentioned earlier, it's allowed us to basically build a virtually clean balance sheet where we're in a net positive cash net of debt position at the end of the year of $2.6 million. If you look at the dividend yield, like I said, we started that in the third quarter last year, increased it in the first quarter this year. It's a little over 7%. And then from a valuation perspective, we're about $150 million US market cap. But if you compare that to our 2P, so proved plus probable reserve at net asset value, that's about $300 million. So we're trading about half of our 2P net asset value. And that's before taking into account some of these, I think, rather exciting catalysts that we've got that we're targeting with our 2022 capital program. And the last point to make on this slide is our inside ownership sits at just shy of 11%, and that's a number that's been growing quite considerably over the last couple of years. So our core project, Cabaret, this has been our sole focus really over the last couple of years to bring this on production. And the nice thing about it is it's fully developed. So along with our partner, it's a unitized development. We're 49% working interest here. All the surface production facilities are already in place. The 7 wells that we've got on production here are all drilled and tied in. The vast majority of the resource sits on the eastern side of this main bounding fault. So on the field's been very well delineated between 3D seismic and the wells we've drilled. On that map, you can see the black line that runs roughly north-south separates the two sides of the field. So most of the wells have been drilled into the east side. You can see all 6 of them on the image on the left-hand side. The light pink area is where most of the natural gas is being produced from. So we also have a well on the western side of the fault. It produces from the shallower reservoirs that you see there. But these are very high deliverability. So we've actually been able to produce at about 33% higher than what our initial planned production plateau was. And you can see we've expanded that gross unit production capacity up to over 21 million cubic feet a day. Another point to make here, we are looking at drilling an additional well with our partner. It is the Unit C well that you see there. It targets the shallow Pajuca sands on the west side of the fault, but it also targets the same producing reservoirs that we have on the eastern side of the fault in the downthrown location on the west side of the fault. So with success there, we could again further expand the unit production capacity. Couple other points to make here. There's a link to a virtual field tour that you see on the bottom of the slide. It's about 3.5 minutes, but it's a good way to kind of see what we've developed over the last couple of years. So if we move on to the midstream part of our business and the marketing part of our business, 100% of our gas production gets sold through this solution. So what it entailed was us constructing an 11-kilometer transfer pipeline straight west and building a gas processing facility. So this is the first of its kind built by anyone other than the State Oil Company. As part of the transaction, our off-taker, Bahia Gas, who is the local state distribution company, they extended their pipeline distribution network from the south. So the existing industrial complex in Citygate was in a place called Camaçari, which sits just 15 kilometers to the south of us. So they tied that in. They built a brand new Citygate right at our physical location with a capacity of 70 million cubic feet a day. So you can see their Citygate on the right-hand side of the picture there. And that's where our processed gas gets delivered and then flows south into the industrial complex. The way our gas contract works is it's a blend of 3 international benchmark prices, so Brent oil equivalent, Henry Hub natural gas, and UK NBP gas prices. You average those over a relatively long period of time, and that in itself creates kind of a natural hedge, so we have much less commodity price volatility than our peers would. And then on top of that, you layer a gas price floor and a ceiling. Both of those get indexed to US inflation, and you end up with, relative to North American prices, quite an attractive gas price. Like I said, that increased by close to 50%, effective February 1st of this year, up to over $11 US per MCF. Last point to make here is, the nice thing about this is all this infrastructure that we built has been underpinned or supported by our core project, Cabaret, so it's fully paid for. But what it does is it uniquely positions us to quickly convert new exploration or development gas successes into production and cash flow on a very low cost basis. So that takes us to our organic growth plan. To be clear, our near-term goal is to get up to the full capacity of our plant, so 18 million cubic feet a day. That would be about a 30% increase over our current production levels. And then we have a longer-term vision of basically doubling the size of the plant and being about a half of the Citygate capacity that's right at our physical location. So it's a multi-pronged approach. We'll have the full capacity of the plant available to us by mid this year. We are looking to expand the unit production capacity with the unit seawell. That's again mid this year. And then from a conventional exploration perspective, this is all 100% working interest. We spud the first of 2 attractive exploration prospects here on March 2nd, so we expect to announce results at any moment here. These 2 prospects are targeting 4.6 and 5.9 million barrels equivalent of unrisked prospective recoverable resource, and that was evaluated by our independent reserve evaluators, GLJ, and they assigned a 47 and 44% chance of success respectively. So to put this in perspective, the potential size of these catalysts, if we have success at just one of these, it would roughly be the equivalent of our share of the Cabaret asset, so it would roughly double our asset value. Our next project sits in, the last point to make with these are the 2 dots in the yellow acreage that you see on the map here. They sit immediately north of the gas plant that we have. So we would tie those in with an additional pipeline directly to the south. And then our Murucututu Deep Basin Gomo natural gas project sits immediately north of the Cabaret area. So we've already kicked this off. We've got a pipeline that we've extended to tie in the 183-1 well. We're finishing the surface production facilities as we speak, and we expect to have that well on production next month. And then that'll set the stage for a broader development plan. We'll tie our 197-1 well back into the same location, and then we've got plans to drill the first 2 fit-for-purpose development wells into that asset here in the second half of this year. That, on a combined basis, is targeting 2P reserves of 3.3 million BOEs, risk contingent and prospective resource of 3.5 and 12.1 million BOEs respectively. So if you combine that and you compare it to our Cabaret asset, this part of our portfolio could roughly triple the size of our asset base. So like I said, there's a lot of near-term catalysts here. This just is a simplified Gantt chart of when the activity is happening in the bars. The circles with the gas flame in it is with success roughly when they would be tied in and producing and cash flowing for us. You can see the first two bars of those conventional exploration wells with success. Like I said, we'd build a pipeline to the south, and they would be tied in next year. Everything else is pretty much such that with success we can tie it in fairly quickly, including the Unit C well mid-year, the 183-1 well in May, our 197-1 well, we're targeting having that on production by the middle part of this year, and then you'll see the next two fit-for-purpose wells drilled in the second half and targeting to have those on production by the end of the year to maximize the utilization of our gas processing facility. So in summary, why invest in Alvopetro? I think, Alvopetro offers an attractive investment proposition, I think, no matter what your investment focus is. So, to reiterate, we're delivering results certainly well ahead of expectations. We've got our highest gas prices yet at a time when we've just set record production levels. That should translate into very strong results here starting in the first quarter. We've got a strong balance sheet and free cash flow generation capacity that underpins our balanced reinvestment and stakeholder return model. I think for value investors, like I said, we're trading at just 50% of our 2P net asset value. If you look at the Noble research, it's about 3 times EBITDA. So this is a very attractive opportunity, I think, from a valuation perspective. From a yield perspective, obviously over 7% yield paid in US dollars quarterly. And then from a growth perspective, I think there's undoubtedly a very exciting capital program in front of us that has the potential to unlock a considerable amount of value as we move through the next 3 to 9 months, really. So with that, I'll open it up for questions. Yeah. So we're operating onshore Brazil in the northeast part of the country in the state of Bahia, just north of the city of Salvador.
I don't know very much about your industry, but I can study as much as I can. But I really like that one thing is that, for what I hear of the experts, energy should be instead of the crypto, be the focus of the investment. I don't know very much, but I don't understand more.
Yeah, I think obviously with the increase in energy prices globally, it's becoming a focus again for people. But the reality of the energy business is a very high margin business, and as a result, we can deliver very strong returns to our stakeholders, and we're excited about now growing our business again now that we've established this nice base of production.
Have you considered to go more to educate the young generations about all these benefits that they can get in their investments?
Yeah, that's a good question. So the question was, have we considered trying to educate the younger generation more on the benefits of these types of projects? I think, especially our project being natural gas weighted, obviously that's the cleanest burning fossil fuel that there is, and I think there's no doubt that the world needs more energy, not less. I do think, there's a good opportunity to try to capture that investor base. Yes. So, the energy business in Brazil is extremely critical to the country, and I think, there's been a big initiative to try to open, in particular, the natural gas market. Obviously, like I just said, that there's been a long history of activity in Brazil. So the first activity in the country actually started in the basin that we're operating. It's a very industrialized area back in the late 40s. The government's focus is to really try to open up the natural gas market because, you know, delivering more affordable and cleaner energy into the energy matrix in Brazil is a strong focus. And I think they're realizing it's very expensive to be importing half of your natural gas at a time when, you know, if you look at global LNG prices and what's happening, you know, those prices are 2 to 3 times higher than what we're delivering into the market. So from an economic perspective and from an environmental perspective as well, there is you know, expanding focus on natural gas, and we think we're uniquely positioned to be able to be part of that solution. All right. Yeah. All right. Thank you. I'll be around if there's any further questions, and don't hesitate to contact me anytime. Thank you.